Hey, so what does a bookkeeping business actually do? Okay, so let's talk about what services do clients actually pay for, and what do your monthly deliverables look like? So the core outcomes are clean books and reliable reports. So P&L and balance sheet in most cases. Now, the bigger thing that business owners are really paying you for is peace of mind so they can make better decisions. Also, they need to have proof that their business is what it says it is when they go to get loaned, when they go to sell the business, or when they go to get investment funding, right? So oftentimes what happens is business owners are moving throughout the year and they're just focused on growing and hunting, right? So a lot of times they're like hunters, where it's they're getting sales, they're getting people to buy their services, they're trying to pay their employees, they're trying to hire more, they're trying to run advertisements. Sometimes it's digital, sometimes it's in person, sometimes it's billboard ads, right? But they're usually used to thinking in terms of, if the bank has more money today or has less money today, it's if it has more money, I'm doing well. If it has less money, I'm not doing as well. And then sometimes there's weeks where I have $0 in the business bank account, right? And it's just there's a big panic. So it's very up and down, up and down, up and down. Now, they start bringing on generally a CPA to help them when it comes to tax time. Now, this is okay when a business owner is doing 100K, 200K per year. But as they start getting bigger and bigger and bigger, their CPAs start getting a little irritated. Dude, why are you giving me $1 million worth of transactions a week before tax time? And the business owner's well, this is what we've always done. Why are we changing? It's well, this is a lot more work than what it usually is. So I'm going to do your taxes or your bookkeeping, and they call it compilation. If a CPA does it, they generally call it compilation. I'm going to do the compilation this one last time, but after this is over, you need to go find a bookkeeper to do this for you on a consistent basis, so you don't have this huge surprise at the end of the year. Another reason why that's important too is because a lot of times if these business owners wait until tax time, they can't take a lot of the deductions and tax credits that otherwise would be available to them. So in a lot of cases, they end up losing the ability to really get the benefit of the CPA firms. And a lot of times the CPA firms, a lot of CPA firms, they will kind of base their fees around how much they think they can save the person. Now, they can't really express that fee in that way, so they can't be hey, I'm going to just charge 10% of whatever I save for you. That's called contingent fees. In certain locations, it's actually illegal to do that. But it is kind of it is based on, right? So a company that they say, if you save someone $600,000, you can generally charge, 30K, 60K, 90K for that, right? But if you can only save someone maybe $1,000, you can't really charge that much. So by having the bookkeeping done, it allows the CPAs to basically be able to charge more money because it can add more value at various parts of the year. So as a bookkeeper, you're technically working with their CPA to help the CPA be in business better, maintain their clients longer, and get more revenue from their clients. So that's kind of why bookkeepers have their kind of place inside of this game. Now, another reason why too is that business owners, they want to grow, but in a lot of cases, they only know one or two ways to grow, right? It's either hire more staff or it's sell more stuff. But sometimes when they sell more things, there are opportunity costs that prevent them from able to reach their full potential. So let's say, for example, an e-commerce store, they sell 2 items. Or let's say they sell a bunch, right? Let's say they sell a ruler, a phone, and they sell these stylus pens. Okay, so let's say that this thing sells for $10, right? This thing sells for, we'll say $5. This thing sells for $15. I know it's, the phone should cost more, but whatever. Just go with the example. 5, 10, 15. Okay? Now, a lot of people might be thinking that, okay, we should sell these $15 items, right? And a lot of business owners just kind of say, okay, this one's the highest price, let me go. But they might not be factoring all the different costs that go into this. So they might not be factoring that they have $5 of labor, right, to actually put the ruler together. They might not be factoring that it costs them $3 worth of advertisement. They might not be figuring out that it costs them $2 worth of shipping costs. They might not be factoring in that they have $4 worth of advertising costs associated with it, right? So off of $15, they're only making $1 profit, right? So on this thing, it's $15, but only $1 profit. So let me write that down. Rev. This phone, right? 10 rev. It might only be making like $5 profit, because let's say that the only expense they have is it costs them $1 to build this thing, $4 to advertise. Okay, cool. So they're making $5 in profit. Okay, so out of these two items, you're probably gonna want to do this one. But now this third item could be, let's say it's $5 to sell, but it costs 50 cents to advertise and it costs 50 cents to make and ship, right? So let's say that they're actually making $4 profit, right? So in total, it actually might be better in some cases for them to sell either this item or this item, right? But they won't know that unless they do their bookkeeping, right? There's cost of goods sold. There's a lot of different things that are involved with this, right? So a lot of people are like, okay, let's go and build a billion of these. Let's go and buy these. But they're not making that much in actuality, right? So the business feels really good, but it's actually not moving. So in some cases, that can be considered a bad decision depending on what the business owner's goals are. Because oftentimes the business owner, especially if they're a little bit smaller, like below like $3 million a year, the business owner wants to make money, right? So they're gonna actually have an easier chance of making money on one of these other items, especially this $5 item. If you can sell like 30 times more than this, you might actually be better off selling this smaller item and just ordering a billion of these and pushing these things forward, right? But you don't know that unless you have accurate books to keep track of this stuff, right? That's just a simple example. There's a million different reasons and different things that can go along with it, but that's a pretty good example. Now, another reason why this is important is because you're not only providing peace of mind and clarity towards how to move the business forward, but you're also adding consistency. So you can do a monthly close. So that just means that at the end of every single month, you can tell the business owner, where is their business actually at? Did they improve? Did they go down? Is this normal within the industry? Is something happening to the business? And you can basically check in with them to make sure they understand why their business did what they did. Okay, so that's gonna allow them to have more peace of mind on a consistent basis. So that's really what you're kind of the outcomes you're delivering. Now, there are a lot of different miniature outcomes that you can provide as well, right? So sometimes you can say, like, okay, if their cash flow, if like, let's say at every like 25th of the month, they run out of money. And they're like, I don't know why it happens. I have to go and like take a personal loan or to like, pay for the rest of my expenses and my payroll. How do I stop this, right? So that's another thing you can kind of help them do. Now, some core services. So if you're getting started, right? So one thing that I like to do when it comes to like bookkeeping, right? So the first thing you're gonna be doing is like categorizing transactions. That basically just means you're basically putting different transactions in different categories. So let's say, and if you're watching this video, you don't know what bookkeeping is, I'm just gonna kind of make it like the simplest definition of transactional bookkeeping. So for transactions, imagine if you see this closet behind me, there are 4 different distinct categories. There's red, there's yellow, there's blue, there's orange, okay? Different color clothing, right? So every item in my closet that's red is gonna go here. Every item that's yellow, every item that's blue, every item that's orange. Now, I could even choose to categorize them slightly differently by saying every shirt that's red, every shirt that's yellow, every shirt that's blue, every shirt that's orange. I can have another categorization or another like set of rules and just things for pants, right? But I'm basically trying to put the items in the right spot so that we can really start seeing where's the money actually going inside of the business. Now, in QuickBooks or the different accounting software, you can have these repeating patterns called rules. So basically every time I see a red shirt, I'm going to try to categorize it inside of the red bucket. Now, in some cases, QuickBooks can be a little bit off because I might think that this thing is a red shirt, but really it's like it's a burgundy shirt, and it might go in a slightly different like category. And that's kind of where the fine tuning comes into this, and why you actually you can't just have a robot doing it all the time. In the future, we will have mainly robots doing it, but there still needs to be someone that can interpret the data and have that communication with the business owner. And even then, to be honest, the interpretation with the business owner and the communication could be done with the machine, but most business owners are very technologically, they just don't understand technology, and in a lot of cases they don't want to know this stuff. They want to specialize in what they specialize in and leave the specialization in bookkeeping and accounting towards the professionals. Now, a lot of different reasons why, whether it's the best thing or the worst thing, doesn't really matter. It just is what it is, and it's going to continue for at least the next 10 to 15 years. So that's a really good thing for you. Now, if you want to be in business for like 40 years from now, that might be a little different, right? We don't really know what the future holds outside of 20 years, like how fast technology is improving. But if you want to set yourself up for life, then get in this thing, spend the next 5-10 years, go stack an extra $1 to $2 million, and you should be relatively good. Okay, next thing is like reconciling bank statements and credit cards. So basically what that means is like reconciliation is more about like accuracy, right? So is what's in my accounting software the same as like what is inside of the bank statements and the credit card statements? Sometimes we can do is like, what I like to do if I'm reconciling, I will have one computer screen with like the bank account, the bank statement or the credit card statement. The other side is my accounting software, and I'm just going line by line by line. Okay, this here, okay, boom, 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 boom. Just making sure that everything kind of transferred over. Because sometimes when you connect QuickBooks or the accounting software to the, like, let's say you do what's called like a live, I believe it's called a live feed or a synced feed, right? And the information can come over from that bank statement into QuickBooks like automatically. You set up, usually it's using like something called Plaid. It's like a third party it's almost like a communication between applications, between financial applications. And the money starts coming in. Now sometimes the transactions and the line items are not correctly brought over. Sometimes QuickBooks just doesn't catch all of it. Sometimes it duplicates things. Sometimes it starts, but then it loses connection. There's a million different things that can happen. So you have to make sure everything is there. That's what you're doing when you're reconciling things. Okay. Next thing is like you're starting to deliver reports. That's just a short summary of what's changed. So generally, I'm going to be doing the P&L and the balance sheet in a lot of cases. Now, it really depends how much data they have, because sometimes for when you're delivering reports, if let's say it's like June, but like they have not been doing any of the accounting up until that point, it can be a little bit challenging, because if they do not pay you to go back from January to the end of May, this is kind of a mess. And a lot of business owners, like, they might get a little bit cheap and might not want to pay for that. So that's where they can get a little bit kind of messed up, and then you have to kind of do like the months moving forward. It just really depends. You have to get good at getting business owners to want to do a full cleanup and start with clean books. It's a very big revenue generator for a lot of bookkeepers. They call them cleanups. And yeah, just really focus on that. But yeah, just giving them a short summary of like what's changed, and like it helps if you can be able to explain that. Now, if you don't have a lot of confidence in your speaking ability, or maybe you're newer to the industry, this is something that you build upon and you get better at it. Now, inside of our mentorship program, we can teach you how to communicate like a bookkeeper, like an accountant should, so that you can feel very confident when you're presenting the numbers to the business owners. But don't, just kind of work your way up, start small, start building from there. Yeah. Don't feel like you have to be perfect from the first time you do this. Missed my alarm. Cool. Next thing is optional add-ons. So this is like AR, AP, so accounts receivable. That's like saying, let's say that a business owner, let's say that they make a sale today and they collect, like, let's say they make a sale for $5,000, then they collect only $1,000. So they collect about 20%, right? That means 80% is still outstanding. So for accounts receivable, you have to be actually either invoicing or going and following up the people that owe the business money to try and get as much of that remaining $4,000 as possible. Now, in a lot of cases, you might not be able to get the full amount of money, but you try to get as close to 100% as you possibly can, right? Now, with every industry, as you start working with more clients, you're going to start knowing, like, what is the industry average, right? So, like, let's say for like an online coaching business, for example, it might be between 85 to 95% of what they actually sell, they're able to collect, right? And in some cases, they have to write off 5% of whatever remaining, they just never collect it, right? So, but knowing that's really important, because sometimes with AR, you can actually charge not just for like doing the time, you can also charge for like number of invoices you send out. You can also set your rate based on how much you actually collect. So if you know that business A is, let's say, collecting 20% of their total sales, right? If you can say, well, hey, any number that I collect above 20%, you give me, 30% of that, let's say, for example. I've seen some companies go as high as 50%, right? Like collections agencies. Now, you don't necessarily have to be a collections agency with this. It can be as simple as like a lot of businesses never even like reach out to the customers to get the money. It could just be as simple as pressing a button to email the customer with an invoice link for them to pay, right? So it's like, you'd be so surprised. Yeah, a lot of business owners will literally just never send the invoice. And like, so it's like, it's basically free money if you can get the AR, like just doing it correctly. Now, same thing with like, AP and payroll, and like, you can also do some light advisory services. Advisory services more like on giving the interpretation of what you should do next with all the numbers that are available for you. Now, for most people, if you're just getting started, I would not try and offer that service. Again, that's something we teach inside our program, like how to start moving and start talking like a CFO, but I really wouldn't encourage that for your first like one year in business. Save that for when you're at like 9K, 10K per month and you just want to go and basically double the business overnight. Just save it for that. Because I mean, at that point, like if you get like 2 or 3 CFO clients for like 3K a month each, that's good. Now with CFO services, in a lot of cases for most people, selling those services without selling bookkeeping or some kind of foot in the door service that everyone understands and knows can be very, very challenging. That's why it's easier if you already have clients to upsell them on bookkeeping and tax advisory, tax planning, than if you just try and go straight into it. Yeah, cool. And that's basically what a bookkeeper does. And just making sure you understand your services and like your stack and your pricing. Now, how you price that's a little bit more of a complicated question. The way we like to price things out is with using pricing calculator tools. So it allows us to be able to go and like look at the person's book, how many transactions they have, bank accounts, what are some extra features, functions, software that might be included, and we spit out like what is a one-time customized quote for the individual, right? I'm not a fan of doing like the package 1, package 2, package 3. The reason why is because the business owners always try to self-select whatever they want to pay. So like for example, I was reviewing one of our students. She was recording her sales calls before she got into our program, and so she's like doing like package 1 was $270, package 2 was like $680, and then package 3 was like $1,200. And this like huge company came on the call and like they're basically saying, well, I don't think that we should pay $1,200. I think like our books are relatively intermediate, so like let's go for the middle pricing, the $680. It's like, bro, you had like they had so many transactions. Like if that was me charging using our calculator tools, I probably would have like started quoting them at least at $3,500 a month, right? At least $3,500 a month. But they were self-selecting, saying they only want to do $680, right? So it's like they're fighting that. So now when you try and move up to $1,200, like no, we don't want that service. I think this is good enough for us. Even though they're not really an expert at what service level and package should they actually be having, right? But they think they are. So you're giving them that option. Number 2, the $1,200, the actual highest price. Most people's highest price is never high enough. If your highest price starts with a 1, right, and if it's 4 figures and it's a 1, it's too low. If it's 1 and it's 5 figures, like if it's $10,000 your highest package, okay, cool. But most people's highest package is like $1,750, $1,250, $1,200, right? It's like you gotta at least get like, ideally your highest package would have like a 5 in front of it at least. You can have more. Like there's nothing that says you can't charge $9,000 to a client. It's just most times you're not gonna get in front of a client like that, at least for your first couple clients. Now, the other thing is that people think that, okay, if I give them three price options, then like they're gonna choose one of them. No, that's not true. There's really always 5 options someone has. They can stall / think about it. They can choose option 1, option 2, option 3, or they can choose none of them. So you actually have 5 options. Versus everyone thinks like, oh my gosh, there's only 3. It's gonna be one of these packages. It's like that's never the case. There's always no, and there's always like, let me do it next year. So just kind of be aware of that. It's a pro tip. Okay? Awesome. Yeah, and if you want exact pricing, like how to do it, just go ahead and click the link inside the description. Like we'll actually just give you our pricing calculator inside of our mentorship program. Okay? Join the mentorship program. See this link can help you out. It's gonna be the fastest path towards your goal. I guarantee it. Okay? I will talk to you. Have a good rest of your day, and I will see you inside of the next section, which is gonna be what to sell as a bookkeeper.